A year ago, Chicago Booth finance professor Raghuram Rajan was named governor of the Reserve Bank of India. When he arrived, inflation was high, the currency was at a record low, and the economy was weakening. He raised interest rates and took steps to strengthen the currency. Now the economy is improving. Professor Rajan recently sat down with Capital Ideas. In our first part of the interview, he talked about what he's achieved and what more there is to do.
When I came in, we were trying to defend the currency, and it was every day reaching new lows. And part of what I did was to try and change the conversation from focusing on currency defense to focusing on getting the fundamentals right, getting the inflation down, and alerting people to the fact that we were determined to do it, but also, we were determined to embark again on financial sector reforms. Now, I wasn't alone. The government did an enormous amount in trying to reassure investors, emphasizing that it would stick to the fiscal deficit, taking a bunch of actions on its side. And of course, we had a little bit of luck, which was the underlying conditions for the turmoil, which was the Fed potentially embarking on serious pullback from quantitative easing. Basically, that didn't happen in September. It gave us a little breather, and we used that breather to try and rectify some of the problems in the economy, and it worked. Okay. What more needs to be done to fix India's financial system? Well, India is a developing country. And while parts of the financial system are first world, for example, our execution of trades on the stock exchanges is second to none. Our payment system processes some of the largest number of transactions in the world at relatively low cost. So we have, in some places, a first world system. But in some places, we're still a developing country. So there's a lot that needs to be done to get us from there to the kind of financial system a first world country has. Amongst things we need to do, I would put increased variety in the banking system, new banks, more access to individuals and small firms to finance. I would talk about deeper markets, which you talked about, new products in those markets, some of which we control, some of which the Exchanges Regulatory Authority controls. Then I would say that we really need to have a better system to deal with financial distress. When companies get into trouble, how do we ensure they put back on their feet and their finances are restructured? We need to do a better job there. We need to do a better job for financial firms. We need to, as I said, bring more people into the financial system, but we also got to give people a sense that their money is relatively safe and earning a reasonable return, which means that we need to bring down inflation, because inflation eats into returns that people get from their savings. So that's a pretty big package, and we're determined to do all that.